Welcome to Factful Finance. Here's a thought-provoking question for you. Are you building your investment strategy around short-term needs, or are you planning for the future? The truth is, most investors fail to set clear goals, and it's a big reason why many end up missing their financial targets. But today, we're going to change that. In this video, we'll break down the key differences between short-term and long-term investment goals, and most importantly, how you can set and achieve them. Let's dive in. Disclaimer: this video is for educational purposes only. Any apps or products mentioned aren't an endorsement. For personalized guidance, please consult a professional. Alright, let's kick things off with short-term goals. Think of short-term investments as the ones you're making for the next 1 to 3 years. Goals like saving for a vacation, a new car, or a down payment on a house. With short-term goals, your strategy is more about preserving capital while still allowing for a small amount of growth. This is where things like savings accounts, certificates of deposit, CDs, and bonds come into play. Let me introduce you to Liam. Liam is 30 years old and wants to buy his first home in the next 2 years. He's saving up for a 20% down payment, which he estimates will need $50,000. His primary focus? Safety and liquidity. He's not interested in taking on the risks that come with the stock market, so he invests in a high-yield savings account and a low-risk bond fund. By staying focused on these short-term investments, he ensures his goal remains on track, no matter what happens in the market. Now let's talk about long-term goals. These are the investments you're making with a 5-year horizon or even longer. Think retirement, funding your kids' education, or building generational wealth. Long-term investments are all about growth, and that's where things like stocks, index funds, and real estate come into play. Olivia, on the other hand, is 40 years old and wants to retire in 25 years. She knows that the stock market has the potential to outperform bonds over the long haul, so she's invested in a mix of low-cost index funds and individual stocks with a strong track record of growth. She understands that there will be ups and downs along the way, but she's in it for the long game. A key part of setting your long-term goals is understanding the power of compounding. This is where your money starts working for you. Imagine you invest $10,000 in an index fund that earns an average annual return of 7%. Over 25 years, that initial $10,000 could grow to nearly $55,000 simply by letting your returns compound over time. Data insight. According to a 2023 study by JP Morgan, a diversified portfolio with a mix of stocks, bonds, and alternative investments returned an average of 8.2% annually over the last 20 years. This long-term strategy is what allows investors to build wealth steadily, even if short-term markets fluctuate. So how do you actually achieve these goals? First, start by determining your risk tolerance. If you're looking to invest in the short term, you'll likely want to take on less risk, meaning more conservative investments like bonds and cash equivalents. On the other hand, for long-term goals, you may be comfortable taking on more risk for the potential of higher returns. Let's look at a real-world tool. If you're just getting started, a goal-setting app like Personal Capital can help you track both your short-term and long-term goals in one place. This way, you can adjust as life changes, whether that's a shift in income, an unexpected expense, or new investment opportunities. But here's something most people overlook: flexibility. While it's great to set investment goals, it's crucial to reassess them regularly. Life happens. Unexpected events can change your financial needs, and your strategy may need to shift. That's why reviewing your financial goals every 6 months or so is key to staying on track. For example, Liam might decide to move up his home buying timeline, or Olivia may want to start contributing more toward her retirement account as she approaches her 50s. I want you to think about your own investment goals for a moment. Are you more focused on short-term needs or long-term wealth building? Drop your thoughts in the comments below. I'd love to hear your perspective. Before we wrap up, here's a quick recap. Short-term goals are about stability and preservation, while long-term goals focus on growth and compounding. Use a diversified strategy, review your goals regularly, and always stay flexible. If you found this information valuable, please hit the like button so we know we're hitting the mark. And if you're serious about making financial progress, subscribe to Factful Finance so you don't miss out on more tips that'll help you achieve your financial goals. Thanks for tuning in. Check out the next video on the screen. You'll find it insightful for your financial journey.